Hey guys, welcome back to another video. In this video, we're going to talk about qualifying stocks, technical analysis and fundamental analysis. Technical analysis is your charting for the most part, and fundamental analysis are the numbers. And in another video, and we may have talked a little bit about it the last time, fundamental analysis may be like, earnings per share, return on equity, profit margin, earnings growth, sales growth rates, all of it. What do the numbers look like? You get into volume, you get into just all of the stats, how much cash do you have versus how much debt do you have? All of those sort of things. What does share structure look like? What's the story of what industry are they in? Fundamental analysis. Give me some of those details. And you marry those things up with technical analysis. So we're going to take a look at how I set up both. So technical analysis, what you're looking at, and for those who will look at this video at another time, you're looking at Thinkorswim, the TD Ameritrade's platform. TD Ameritrade was bought by Charles Schwab, but it'll still be Thinkorswim for the brand. On the left, you have news. So if I want to have live news versus stock-specific news, I can put that up there. Time and sales of when something trades, the time as well as the price, as well as the size of the order. If it's $1 million, a million share trade versus a $200,000, 200,000 trade. So it'll show you the size of the trade. And we can take a look at an example. If I pull up Tesla, you can see the trades that are going through. The time is 7:47. The price is 214 and 55 cents. 23 shares were bought. 179 shares were sold. So it's the time and sales. That helps you get an idea of what's going on real time with how people are trading it. Watch lists that will help you bring up names for your technical analysis. There are tons of places where you can input your own watch list. Like you see, I have a number of them. And then I named them different things. And then I have my after hours or pre-market gainers that are going on. If I click on it, it'll show me what's going on after hours, stocks that are moving. And I may take some of those names. I can marry the system up. You see this red one, red one, red one. If I click on something, it'll change them all to that particular symbol. It'll show me what's going on for the news, time and sales, and the chart on all of it. So using technology the way it is intended to be used, which is to make your life easier, you certainly need to do that when you set up whatever platform you trade on. And so they have some built-in scans, like, if I go to public, here are their built-in scans that are already there, so I don't have to put these in myself. Whole other row. There's just a lot of information that's out here for you to find names. Like the S&P, 500. If I click on it, it's going to show me all 500 stocks on the S&P. So it's it's a powerful, powerful setup to be able to get to where you want to get to and find what you're looking for. And then, if I'm looking for something by industry, all of that is here. If I need to create a watch list, I can certainly do that. If I need to create a new scan, I can do that as well. And then a few other functions, share. I can share watch list with, I would imagine if I click on it, it's probably going to give me the option to share it with somebody if I have a particular watch list. So, and then there's a quick chart down here. This is not useful to me. I can change this to some other sort of measure, switch the gadget out. And then so above you have your monitor. It'll show you if you have any active positions working or whatever the activity is, an account statement. I don't know what this FX report is. If I want to trade, what do I want to trade? Am I trading stocks? Am I trading I have Forex trader, et cetera, et cetera. If I need to analyze something, I haven't really used this function, but I'd like to take a dive into it to see, kind of what it does, but I have no idea. This function, as far as scan, stock hacker, haven't done any of that. Market watch, there are quotes, alerts, etc. Charts is what you're looking at now. Tools, I haven't done anything with any of this. I really don't know what a lot of that it's all about. The education tab, learning center, where if you want to learn something about a particular aspect of trading or investing, it would be in one of these two places. And if you need some help, there's a way to contact the platform administrators and the customer service folks. And so when I evaluate stocks, technically, I like to use 4 different time frames: monthly, weekly, daily, and hourly. And then when I drill down, Sharonda, when I'm looking to actually enter the trade, I'll drill down into smaller time frames so I can see it. And we'll go through one of those exercises, maybe a couple of them tonight. So
I think I may have missed something. You say you drill down monthly, weekly. Oh, okay. I see where it says MO for month, week.
yes, I'm
Okay,
sorry.
I'm so
And then
smart.
daily. And then obviously if I click on this, I can change all of this out. And if I want to customize it, then I just click on customize and I can add a different time frame. And I can change what everything looks like and all the rest of the stuff. It's one day, I don't know what day it's going to be. I'm really going to try to touch every little thing so I understand every little thing. And up here is a message center. It'll show me what trades have happened today. Like if I needed to, maybe I was keeping a log or something, I can go back and look. This is all today since this morning, what I did and what happened. Then you start to get into yesterday a little bit. So Foursquare, and the reason why I look at stocks in this way, monthly, weekly, daily, hourly, everything is a factor of 5. And I'll read to you from this little book that talks about time quickly. Factor of 5. Here's where I learned a lot of my stuff from initially, called Day Trading for a Living. It's upside down. Day Trading for a Living. So it says the factor of 5. I'll quickly read. Analysts often feel confused when they look at charts in different time frames and see the market is going in several directions at once. The trend may be up on the daily charts, but down on the weekly charts and vice versa. Which of these trends will you follow? This becomes even more complex if you look into intraday charts, which I spoke of, like 30-minute, 15-minute, etc. Most traders pick one time frame and close their eyes to the others until a sudden move outside of their time frame hits them. The factor of 5 links all time frames, is what you're looking at on the screen. If you start with monthly charts and proceed to the weeklies, you will notice that there are 4.5 weeks to a month, factor of 5, right? As you switch to daily charts, you will see that there are 5 trading days to a week. As your time frame narrows, you look at the hourly charts, there are approximately 5 to 6 hours to a trading day. There really is 6.5 hours to a trading day. Day traders can proceed even further and look at a 10-minute chart followed by 2-minute charts, which of course is a factor of 5. All are all related to a factor of 5. So the proper way to analyze any market is to analyze it in at least 2 time frames. They should be related by a factor of 5. When you analyze the market in 2 time frames, the shorter of them has to be 5 times shorter than the longer one. If you want to analyze daily charts, you must first analyze weekly charts. And if you want to day trade using a 10-minute chart, you first need to analyze the hourly chart. So you kind of get what they're trying to tell you. So when I set up my stuff, when I'm analyzing something, and say we'll use whatever, Tesla as an example, because we were just looking at Tesla, I'll look at the monthly chart first so I can get the big picture. Let me clear all this out. What does the big picture tell me? So when I look at the monthly on Tesla, I can clearly see that the stock was in a downtrend, right, for months coming down here. And I can clearly see that the stock was in an uptrend for several months using this corner, and extending the line. And looking at the monthly, I can clearly see that we made a bit of a double top. We topped out in here and we topped out in here. And literally I can draw a line right there, and how sweet that it matches up. This top area with that top area, this general area. So when my neighbor called me, Lewis called me and asked me what I thought about Tesla, because he already owned a lot of Tesla. And did he think, do I think he should buy it? And it was around 113, buy more of it. And I said, Lewis, you need to buy all you can buy down here, because the stock was in a downtrend on the monthly. It made a double bottom in here. And because I was able to analyze the stock in different time frames, now looking at the weekly, here's my double bottom down in here, which is this over here. And looking at the weekly, you know, let me back up. I can mark all of these right here, Sharonda, with the month. I just click on add a drawing and go to T. And I can just put MO for month. And I know that that line and this line is their monthly. Just so I can see what the big picture looks like, monthly line. And then when I look at the weekly line, I know within the confines of the month, the stock also, of course, was in this sharp downtrend. But as I make this bigger, what you can see is the stock bottomed in here. So we've got a bit of a, you know, hey, we've kind of hit rock bottom and we've held the bottom. See, we've held it in here and we started to curl. So here was my weekly downtrend. I know we were starting to put in this bottom. So the buy point, the real buy point, if you're following the weekly trend line, was 5% above this 130, roughly 130. And 5% above 130 is about, what is that, 137? So 137, we'll call it, was the place where you would buy it as long as it had good volume. And sure enough, in this particular week that we're looking at, it had good volume. And in fact, it closed at the very top of the range for the candle. So that's really positive. So if you bought the 137 early in the week, by the end of the week, you were at 178. So, and I have to show you this all the time so you can see the money. A $5,000 purchase of buying the breakout, you would have bought 36.5 shares times 178. Your new balance is 64.96. So you've made about 25% of your money, at least within the week. So, but then you bumped your head against this. This is the monthly downtrend line because it's right here and it crosses over. And this is that line right here. So monthly, weekly, I know sometimes corresponds or is close to what the monthly looks like, but the weekly breakout was right here. Now I'm up against some resistance on this monthly downtrend. You see, when the weekly was coming down, look where it hit its head. It hit its head. I'm sorry, this is the monthly. Scratch that. It's the weekly. The weekly coming down, it hit its head right here against resistance, right here in that line. And then it came down some more and hit its head, guess where? Against that resistance line. Came down, hit its head, but this time it went through it. So buying breakouts, attention, here's the rule again, 5% above the resistance point with good volume, closing that time frame, 5% above the resistance level with good volume. And both of those criteria were met when the stock broke out. So now the bigger picture over here to the monthly tells me that we're going to bump our head somewhere right around this mark right here. And we paused, but then we went through it and then we kind of rounded over it. And then what was resistance now becomes support. So this line right here on the monthly, what was resistance now becomes support. So it needs to hold in here at 148. So going back to me telling him when to buy it, I was able to drill down on the smaller time frames to recognize that right around 108 was a screaming buy, and it dropped to a low of 101. You can see here about 102, but I was telling him at like 105, 108, I said I'd really be a buyer right here. And if he bought then, which I do not think he did, it ran up to yeah, if you're running down here, I'm looking at a weekly and I have to slide it over a little bit. When I told him I bought it at 105, 108 over the next month, because you bought it here, over the very next month, it ran up to a high of 217, and you can see those numbers up here. So if I hover over this candle, the high was 217.65. And Sharonda, forgive me if we've gone over this particular name before in this scenario, but if we bought it at 108 and you were able to sell it at the absolute high of roughly 218, 218 minus the 108 is $110 move. $110 into the 108 that you bought it at is more than 100% on your money. So you've doubled your money in a month by buying the breakout. So big star, when you look at your notes, learn how to buy breakouts and do it right and do it well. So you're looking at a four square again, monthly, weekly, daily, and hourly. So if I'm evaluating the weekly, I must first take a look at the monthly so I understand what the big picture is so that it'll help me in my decision making. So daily, if we take, I'm going to clear these lines. If I'm starting to think about where would I enter it, I know that this stock needs to hold 148 because we were looking at this downtrend line, and then we were looking at this uptrend line, and then we had the double top, which was right in here. So this was support, stock went up, hit support, went up, hit its head here, double top 1 and 2, so it hit its head. And then was it going to hold support, this uptrend line? It has not. So what was support now becomes resistance. And guess what? Once it went through and closed 5% below the support area, because the rules are now reversed, you know, do we have kind of good volume, and is it going below and closing by 5%, which it did. Now it made a double bottom here. You can see it's a bottom and another bottom, but what was support going up now becomes resistance, and I'll make this bigger. So coming back up, guess where it hits its head? This is now resistance. And it's important for you to understand support and resistance, uptrends and downtrends. Again, we can teach an 8th grader this, not making it harder what it is. This was in a downtrend. This is in an uptrend. It hits support. If it goes through it, what was support now is resistance. And sure enough, guess what? Next month, it can't get through it. Next month, can't get through it, starts to roll over. And so where does it roll over to? You know, the bigger trend line, which was going to be this one, this was still the monthly one, it needs to hold this trend line, because on the way down with the bigger picture, it needs to hold this downward action here. So there's a lot of different lines to look at, but it needs to hold in here. And if it doesn't, then it's going to go lower. So taking something you're looking at, Sharonda, and drawing lines, trend lines, and patterns will help you understand what a stock is doing. Does that make sense?
Absolutely.
Am I going too fast?
No, I like how you're
Okay.
breaking everything down.
I'm just making sure. So now when we drill down into the daily, say I'm looking to buy Tesla. I understand the big picture, the monthly, I understand what's going on in the weekly. Now I look at the daily. What is this daily thing telling me? I can see that we were in a slight downtrend in here, and it was more of almost like a little bit of a channel. And we had this support area right there. We were doing this thing. And then guess what? What is this right here, Sharonda? Resistance or support? This line, it's hitting its head. It's hitting its head. So that is,
Resistance.
yes, ma'am, resistance, right? So I extend my line out and it came down and I had support down in here. There's a bit of support there and then it hit again close to it. And so it bounced off of it. And we're spinning up towards resistance again. And what's the rule?
5%.
Yes, ma'am, 5% with good volume. Volume was increasing in here. And let me make this bigger so we can see it. So it started to go through it. And then when we close the time frame, if we call this line roughly 200, 199.87, 200, 10% is 220, 5% is 210. So when we get to 210 with good volume, which is this line here, that would be my buy point. And we had some decent enough volume to kind of to check the box with it. So if you bought the 210, literally 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days later, we're at roughly 276. $66 move divided by the 210 you bought it at, you made 31% on your money in 12 days. That is a healthy amount of money to make in 12 days because you started with 5 grand, you made 30%, you made an extra $1,500 over the 12 days. And so understanding how to buy breakouts are important. Well, we can't do anything with this, but will you recognize this opportunity in the moment? Because if you can't see the right-hand side of the chart and you can only see this day where we're starting to break this day right here, 210, wherever that is, where we're starting to break out right there. In that moment, you've got to say, what's the rule? Yeah, we're breaking out because some people will say, well, Eugene, why would you buy a stock when it's as high as it's ever been? Say that was as high as it's ever been. Because stocks that are making new highs usually tend to go higher. It's just what they do. Because there's a reason why it's going higher because the institutional investors, the retail investors, everybody involved has looked at the fundamental analysis and they've deemed it worthy to trade as high as it's ever traded, and it's going higher. So, but over the course of its trading, if it kept hitting its head, then traders can see that. They're like, it kept hitting its head at 200. And when it finally breaks through 200 with good volume, it's telling you ding, 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 we're going higher. And that's when you need to get with the trend because the trend is your friend. Get with the trend. When something is starting to break out, you need to get with that trend when all of the rest of the stuff makes sense. So it's pretty easy to make 30% on your money in 12 days. Then we had a bit of a pullback. So if I'm drawing some lines on the daily, I have a very wide line, this point, and this point, and extend it out. Then I have this line where the upward movement increased, and then I have where it started to really kind of go parabolic straight up. So I have these 3 lines that cascade out. So this first one, it helped me make it. Try that again. Extend it. Just erased it. And then this was more like this. Somewhere right about there. And then we had this one that was a bit more pronounced going up. And even this one in here where we really start to go up. Let's try that again. Make it bigger. That bigger like that. Slide this one up. So as this mini trend started, it held the trend line. So now I've got a couple of points I can mark. And then, we had some resistance here and here. So we skirted along, and then guess what we did? We went through it, right? Right in there. Right there, right? We went through it with good volume. And that was at like 66 and some change. If you look off to the right, you can see the prices. So if I hover over this resistance area, it's about $67. We went through it, good volume, close of 5, you'd have bought it. what was resistance, extend that out, roughly like that. This line, what was resistance now becomes support, if it can hold support. But it did not, it went through it a little bit, but then it quickly got back with, with the program, and then kind of made its way back up. And then we got a couple of points as it started to go up. And then guess what it did? It broke this little bit of consolidation in here, and there was another buy point. You can see the big long green candles, this one and this one, breakout and a breakout of consolidation. And then now we had a couple of points start to go up. So as it went up, held support, holding support on the way up, not breaking this line right here, holding support. And then it was like, oh, let's really get going and start to go climb higher like an airplane. And then as this thing climbed higher, an airplane can't just keep going straight up. So when a stock really starts to go parabolic up, it's eventually going to stop. It just can't just keep going straight like that. So then it starts to come back down a little bit, but could it hold support? It went through it and then it dropped down. But guess what? It found its friend on this line, this upward trend line, and then it bounced from there. So when I'm looking at it, if I were looking at it and I bought it and it just kept going higher and I realized it was getting toppy, my sell point might be right there because, this line's a little crooked. My sell point might be right in here, this parabolic move in here, and I would get out of it. And then my buy point might be if it's going to find support on that line right there. And it did, and it bounced off of it. And then we went up for a bit, and then we got a bit of a double top in here, right? Top. The lines actually almost go straight across just about. How it works out so well. It's technical stuff. Not like it's hard, but it's just charting. So people saw the last time, Sharonda, that it had a hard time getting through here. So when it held this second area of support and it went back up, they're like, you know what? The last time we were up here, it had a hard time getting through it. And look down here, the volume had been shrinking. Coming down here while this was going up, the volume was shrinking. And so I didn't really get the follow through because we need good volume and the 5% above this break. So we couldn't break it and we didn't have good volume and we started to roll over. But the line we needed to hold was that line, right?
Yes.
Didn't do it. Went through it. And the line we needed to hold was this next level of coming up from way back here. That wasn't as strong because there was only so many days of that particular line. It's a few days in here where I extended it out, but it didn't hold that one either. And then it's kind of hitting its head. So what was support in here now becomes resistant, but it pushed through and you would have gotten with the program on the push through. So now what was resistance now becomes support. So it's holding it here. So it needs to hold here. If it doesn't hold here, it may spin on down, back down to here. So no wonder the thing changed so much. The stock changed. Looking at it, I was just evaluating whatever I was looking at. We were initially looking at Tesla. I was like, something is not adding up. So, but in this scenario with STX, sorry guys, STX, it's a similar scenario. You draw your trend lines, find your support and resistance, and the trend is your friend. So no matter what stock you're looking at, Tesla or this one, the rules still apply. So finally, and I'll take your question in a second, I would drill down to the smaller time frames. Let's go back to Tesla. And I would drill down into the smaller time frames of whatever I'm looking at to find where there is an entry point for it. So Tesla, you can see, Sharonda, we're in this downtrend. Most of that congestion is right like that, even though we skirted through it a little bit, but most of it's there, most of it's here, and you turned away there. So think about what you're looking at here, although, it went above it, no, and right back under and then hit its head. So that kind of confirms that line, hit its head, hit its head, hit its head. So that's a pretty good line there. And so if I were interested in buying Tesla, looking at the 30-minute chart drilling down, I need Tesla to break through this resistance area. So I might put an alert right up in here where this crest was, and then above the line, the downtrend line, to kind of marry up with it. So maybe at 215 would be my first one, roughly. But then if I need to really drill down, I know that this within the downtrend is another downtrend, right? Going like that. And I know that there are multiple bottoms in this area, right? We can see them all bottom, 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 bottom. It's held this thing, even though it just breached it a little bit, still held. So I know on a 30-minute time frame, there's a lot of support here, because the more often a stock hits a support area, the stronger it is. So it hit it a lot. So that you're looking at an hour, 2 hour, 3 hour, 4 hour, 5.5 hours of, attempting to hit this thing, but holding. And so, I might be looking to buy Tesla if it came down to 212, knowing that it might hold support and spin back up to 215. But if you think about it, and I know I'm giving you a lot, what does a $3 move really do for me? It doesn't do anything for me. $3 into 215, right? Because if I buy it at 212, right? And I know the overhead resistance is this. So if I buy it at 212 because there's support down here, all right, well, where's it going to spin up to? Was it going to hit its head right here like it's been doing? So $3 into, say, 215, into 212, because I bought it at 212. It's a $3 move to 215. $3 into 212 is only 1% of my money. So math, Sharonda, my wife says that she wouldn't be good at trading because of the math. We have a calculator, you can figure out, okay, common sense says downtrend, gonna hit its head. If I buy it at 212, it's gonna hit its head at 215. What's $3 move gonna do for me? Nothing. I'm not buying a stupid thing at 212, right? Because the thing might not hold 212 this time. It's just financially, it just doesn't really make that much sense for me to do it. The upside is really not there. So if I drill down into, say, a smaller time frame, the 15-minute, what might that tell me? There's that downtrend that was in place. I think this is a weekly downtrend line. I can see going back many 15-minute time frames that this 212 line, this area in here has been holding since probably Tuesday. So, we're only talking 15-minute time frame. So, where to buy it? I don't know. It wouldn't be a buy. I would, it hitting the 212 doesn't appeal to me. The upside to 215 doesn't appeal to me. I need to wait till this thing breaks through this downward trend, that resistance. And that is how you kind of work through top down monthly down to like, okay, where would I enter it at to arrive at what gives you the best chance to make money? Does that make sense?
Yeah, I mean, that actually really makes a lot of sense. That makes a lot of sense.
Good. And so the process of kind of going through it, you just got to get used to it. You're like, oh, okay, it's doing this. I might write an M for monthly. We're in a downtrend, weekly. What are we doing? Then we're doing this daily. And when you're new, I might just kind of start going through it so I can see my notes. I was like, yeah. And then if I'm really going to enter it, I drill down into the 30-minute, 15-minute time frame, really looking. Doesn't make any sense. It's like, I'm not buying this stock right now. It needs to prove that it can get out of its own way, Tesla. Because again, bigger picture, here's your downtrend on the daily time frame, because we're looking at a daily. And I clearly see that since all the way back in June, and go just like this. Let me show it to you a little clearer, and you'll be like, yep, I see that. Let's see here, clear drawing set. Since all the way back in, you call it just about January, it's the beginning of the last year, the stock right about here, it was doing this meandering thing. Then it broke through, which we talked about. That was that 200 mark. Then we ran up to about 300. So you made 50% on your money. But since that time,
Nothing.
the stock was in a bit of a downtrend here. And since that time,
Mhm.
it's been in a downtrend here. So it's just been doing this thing. So if I were going to buy it, if just bigger picture now, if it hits this line, maybe I'll buy it because it looks to have bounced in this area and it runs up, bounce and goes up, up. If it comes down and hits 196-ish, chances are pretty good it might bounce and come up to 250 and hit its head because it's been hitting its head 1, 2, 3, 4 times, maybe 5. 5 times in a row. It cannot get past this downtrend line, but it seems to be holding this roughly $200 area. It bounces, bounces. Will it bounce again if it hits 200? So for me, if I'm going to market, I'm going to market alert me if this stock trades at or below, I'm going to say 210, just for me to think about it. So
Okay.
that, and we're getting close to that because if it trades at 210, it's only a stone's throw away from 200. If it trades at 200, maybe it bounces up to 250-ish, 240 something, and I make 20% of my money. And the bounces seem to take, you know, we were at 210 here, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, maybe about 15, 16, 17 days, whatever that is. And then when
Mhm.
we did it again, it took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Took a little bit longer. We channeled, but probably 30 calendar days, 30 trading days at best to get 20% on your money, which is actually more than that on this bounce. So if it comes back down here, will it take 20 to 30 days for me to get 20% of my money from that particular purchase? And so some of these larger companies that are so seemingly predictable what you're looking at, the same scenario is there with smaller companies. But if you go really small, they can be a lot more volatile, but they can also make you a lot more money.
Mhm.
So something like this is pretty simple, but you got to know where you would buy it. So if
Yeah.
you had a self-directed account in a Roth IRA and you really like Tesla and you feel like the whole world's going to go to electric vehicles and Tesla's the leader, or where would I buy it? Well, I don't know where I'd buy it. But if you look through the different time frames, you're like, oh, you know what? I think I'd buy it right around here at $200 at my first purchase and see where it went from there. Does that make sense?
Yeah. Now, as far as your alerts, let's say it gets to like where you like as far as like, let's say it gets to 260, whatever.
Coming
And
back up.
yeah, it's gone up.
Mhm.
And you say, okay, do you have an alert where you have it set where you want to purchase?
Yeah, purchase would be
Where
down
you want to
here.
sell? I'm sorry.
Yes, sell would be up against this trend line. So had I bought it down here, I might say, alert me when we trade around 245. Or I would automatically put a sell order in. I would just click sell and I would put the details in here. Edit, I'd say, okay, I want to sell my 100 shares of Tesla stock at a price of 248, either good for the day or good until canceled. This is extended hours, for the day, good until canceled, extend it. So good until canceled, extend it might take you out a few months. Let me move this out of the way. Takes you out. They're not showing it to me. Good until canceled, extend. It might take you out a few months, but I don't see where it's showing me down here. No, I don't see it. But if I put it in, I'd be able to look and see it. But I don't own it, so it's just not showing to me. And if I want a limit order, like I want to sell it, but only at this price point or better, it's a limit order. If I want to sell it at a market order, at the time, it would be best price, at the time. So there wouldn't be a when it hit, it would just be it would trigger a market order, and whatever was the best price, it would automatically execute fast. And there's some other things you would need to learn in here, like stop limits, stop losses, and all the rest of the stuff. And we'll climb cross those bridges when we get there. So the answer to your question is yes. It's very easy if you're busy, you're a saleswoman, you're hustling and bustling and you bought
Yeah.
Tesla at 200, you could, right behind the $200 purchase, you might say, okay, I'm only going to lose 2% of my money if this stock goes through this 200 support area. So
Okay.
200 times 98% is 196. And I would just simply go, okay, 100, we'll just call it 196. I'll stop moving it. I'm going to sell, edit my 100 shares, hit 197. I want to do a stop limit order or a stop order right there. Good until canceled. And so you're out and about, you're on the road, you're busy. And if the stock hits 197, it'll automatically sell to protect your money.
Okay.
So
That's a good one. I
yeah.
like that.
So if the stock goes up, say we're up here and we're at that trend line where we're like, it's going to hit its head again, like it always does. But say we're right on the trend line and volume looks kind of interesting and maybe there's some news, and you're like, we actually might get through it. Then if it starts to go through it and say we're at 265 and we're like, oh my gosh, what's the rule? 5% above the trend line with
Yes.
good volume, you might say, I'm going to put a stop loss order right below it, maybe with a little bit of leeway back at the trend line to protect at least that money. But if it keeps going up and it goes to because we're breaking out, we go to 284, well, I'm just going to take whatever this is right here, my stop, and I can just drag it up and place it and replace what it was. Does that you follow me?
I didn't understand that part, but
Oh, so say this was right here, my stop loss. I'm just using this particular thing as an example. If this were my stop loss, say that the stock went past the 250 and it was at 290, but you
okay.
had a stop loss at 240 something.
Okay.
The stock kept going up, then you can just take your slider, your stop loss, and just slide it up. As the stock's going up, I can slide this up and then put it right below it and stop it.
Okay.
So as it
That way
moves
you
up,
can
you're going to
make
move
more
it up.
money.
Yeah, you're just
making
going to
more
move it
money.
up. But that can automatically be done with what's called a trailing stop. It'll trail it up, and you can either set a percentage below where the stock is trading or a dollar volume, a dollar amount, like $3 below wherever the stock is trading. It's called a
Gotcha.
trailing stop. So as the stock goes up, it'll just automatically trail it up. So there's so many ways to protect your money, especially if you are busy. You just have to take a moment to manage it well and think about, okay, what do I need to do to protect the gain?
Yeah.
You don't
Yeah.
want to be out on the road busy and all of a sudden something happens and your gains evaporate.
Right.
You don't want to do that. So
Very
yeah,
interesting.
so that's how that works. So then if we're going to take a look at we looked a little bit this the other day because we're talking about qualifying some names. Let's see here. Where is
What about some healthcare stock?
pick one, Merck? Which one you want?
We can go with that one.
All right, let's do you have a name in mind?
No, not necessarily.
Okay. There's a lot of them. Let's see here. Let's take a look at the handy dandy stuff they have for us. Let's see here. Public, NASDAQ, Russell. Where's my by industry? By industry. Consumer discretionary healthcare. Healthcare equipment, healthcare providers, healthcare services, healthcare
What
facilities,
about pharmaceuticals?
pharmaceuticals. Click on that. There are all your pharmaceutical names. There are a number of them, a whole lot of them. You'd have to pick one a particular company that you liked. Let's see if something jumps out at me as I scroll through.
I don't know any of these companies. There's a lot of medicines.
Yeah, there are. Um, Let's see, one with some price. Let's see here. Find one with some price. We know it'll be a bigger one. Let's see here. It's Jazz. Jazz Pharmaceuticals, this chart it could be like a Tesla chart. It's all the same
Yeah,
stuff, it's just a chart.
yeah.
And here's J&J, Everybody knows Johnson and Johnson,
Yeah,
Take a look at, what Johnson and Johnson looks like. 2 years monthly. What are they doing? What does it show you? What's it doing?
it's gone up.
What's the chart telling you?
Um, well, it's gone down.
Yeah, over
Trending
3
down.
months it has gone up, certainly. But overall, for months and months, the stock's been in a downtrend. And it hits its head, hits its head, hits
Continues
its
to go
head,
down
right? So, I wouldn't be a buyer of Johnson and Johnson until what?
until it kind of
So
hits
what's the
that
rule?
resistance above
5% above
5%
this
above,
resistance line with good volume, right?
with good
Do we,
volume.
do we have good volume yet?
No,
No, we sure don't. Technically, some things look not too bad there. Let's look at the weekly. Let's look at a 3-year weekly so I can see a bigger picture. So the weekly very much is like the monthly, just about lock in step. And, I would not be, I can see it clear, the weekly is practically the monthly. It's very pronounced when we came down like this. We were hard down, and then we were been in an uptrend like this. And guess where we're hitting our head? Over this monthly line.
yeah.
And then so I would not be a buyer of Johnson and Johnson until this stock broke through the downtrend line. 5% above it. We know that's like 168. So when the stock hits 168 with good volume, a market create an alert. It'll wake me up when the stock hits about 168. Until then, I don't hear from you. If you come down with this particular line that seems to be doing like this, right? Hitting this, it's just
Yeah.
following this line down. If it follows it down again, well, wake me up if we hit around, 136. So wake me up when we're at or below this 136 area. Then I might be a buyer because apparently when it hits this area, following this pattern, once it hits it, I got to wait 4 months. But if I wait 4 months, 149 to 167, yeah, that's really not moving me much. 149. That's $18 move, 18 into 147. I got to wait 4 months to make 12% of my money? I don't think so. That's way too long. Wait.
You need your money now.
No, yeah, I need my money today. Yeah, I need my money. I need my money now.
Right.
So I don't even usually mess with big, stodgy, slower, boring sort of names. But there's nothing wrong with boring if it's part of your portfolio. If you kind of like their prospects and you want to have some safer money, some more predictable sort of movements,
Yeah.
and you're okay with that, and folks are okay with that. But if you're looking for like something that's is a IGPK, waiting 4 months to get 12% when I could get, if I bought this breakout, 5 times 500% in a week and a half. That was a big breakout.
That's huge.
It is, because we went from, and it's a sub penny stock, very risky, but
Okay.
they have some good news, or supposedly good news, because you're trying to verify some of this stuff. But when you have this breakout with good volume, the stock went from 0011 to a high of, 5.8, and you spent $5,000, and you bought the breakout at point 0011. We'll just call it, you got it perfectly. And you bought, if I can read, 4,545,000-ish shares. And if you were able to sell it at the absolute high this week, times 0.0058, your $5,000 is worth $26,363. So you
Can't
made
believe
more
that.
than 5 times your money in a week and a half. And that is how, Sharonda,
Wow,
finding the money, I always say the money is in the homework. Finding stuff that has potential to run is the difference in making 12%, 20%, whatever. There's nothing wrong with if you make 20%, say in a couple of weeks, that's fantastic, But if you can make, you can find big runners, big gainers in a short period of time, that's amazing. So, but you're not always going to find them. You're not always going to get them right. But if you were buying, 10 stocks, whatever, you had $100,000, you might buy, if you're starting out and you don't have a clear understanding of stuff, maybe it's 50% of the monies in the J&Js of the world, Teslas of the world, 30% of the money's in some sort of cap names that are not big elephants, but they got some flexibility, some lions and cheetahs in there they could run, but they're not crazy risky. And then maybe 20% of your money is in stuff that's aggressive. But I tell folks that I train, if you can learn to do, and I won't try to take you at some crazy super cheetah speed, stuff that moves like faster, in the moment, then the slow stuff is like putting you to sleep. You're like, okay, because if I can learn faster, then
yeah.
like the J&J is like, oh my gosh, this is so boring. The things
If that was kind of boring, I was like, oh,
it's just going straight down like this. If it hits this price point, I'll buy it. If it doesn't, I don't want to mess with it. And the upside's about this. Oh my gosh, let me just fall asleep looking at this. But this other stuff, it could take your head off. Like if you don't understand what's going on, like some people probably got their heads taken off this week a little bit. They're trapped. They're called bag holders. So if I look at the daily, I'll go to the hourly factor 5 over here. Let me get rid of this clear drawing set. Let me start. Okay, I'm not going to stay too much longer. We'll have to get to fundamentals later. This is what the daily was. What is this? This thing was in a bit of a channel, right? In here, we're doing this number. Couldn't get through these points. Then we had a ding, ding, ding moment. Look, volume spike. And look, this blue stuff showed up. Accumulation, distribution. Someone's starting to accumulate this thing. So right there was your ding, ding, ding moment. Like something's going on.
it broke out.
Then it pulled back. Last call for alcohol. Anybody coming with me? It came back to the trend. What was resistance now is support. It came back one more time. Like, hey, we're leaving. This train is leaving. All aboard. And then sure enough, boom, 3 massive days straight up. And then this thing right here is called a doji.
Yeah.
Indecision, long wick. Typically you have a longer wick here. It's not in the purest sense, but it's pretty darn close. Like this is a bit more pure of a doji, where it opens and closed at the same spot. It was up, down, but it opened and closed right at the same spot. Nevertheless, this is a doji too. It's just got a little bit of a fatter stomach. And so this represents, hey, I don't know if I want to go up anymore. Waffling. We've gone up a lot. People need to take some money. People are like, oh, hold on. I'm up 5 times my money. I need to take this money. And then it started to come down.
Yeah.
And as it was coming down yesterday, because I wanted to be a part of it, so I bought it 5.3 and it ran up to 5.8. I could have took the 10% and got out once I felt like it was waffling. It was waffling around a bit, and I was still like, oh, we're going to go down. I felt like we were going to go down, so I eventually sold it at like a $40 loss. But then it came down. You're looking at an hourly chart, and I started buying it down in here at 3.3 and 3.4. And then by the end of the day, we closed at 3.9. So I was up like, I don't know. What is that? Like almost 20%, 15, 16, 7, whatever it was. I sold some of it, but I own most of it. And my thought is that chances are decent that as we were in this uptrend, right? And I'll show you right here. Let me just show you so you know I'm not blowing smoke up your butt. So the symbol's SPZ, I'm sorry, IGPK. This is today. Here's me selling 425,000 shares at 3.8, selling 250,000 shares at 3.8. This is at 2 o'clock, right before I had to get busy. Sold 199,000 shares at 3.9. Sold 100. Well, this is the fill there. So, and then this is me buying it. Buy 588,000 shares at 3.4, 3.4. Earlier, bought 735,000 shares at 3.4. Bought 700,000 shares at 3.3. And then this is at right before 11 o'clock.
Yeah.
And then by 2 o'clock, I was selling stuff. This is I bought a little bit at 4, but later I was this is KYNC. I bought a little bit back, but I was selling it at 3.8 and 3.9. So I'm buying at 333.5. I think I bought like 2 million shares almost at the time, times 0.0035. Spent like 7 grand, and then if I sold it at 7,000 times, no, I have to do the shares. 2 million shares. 2 times 0.0038.5 roughly. There was like a 10% move, so nothing crazy. I just sold off some shares, but I own most of the shares that I bought. But anyway, so it was a quick, easy 10%. And so it was in this bit of a downtrend, certainly here. And then it found this bottom in here. And I could see it on lower time frames. Right in here, this bottom and this bottom. And then we spun up. We started to break through this little mini downtrend in here. And we started to make this turn. And then I think I bought some more at 35. And then we spun up to 4 and 4.1. And then I was like, we really need to get up here around this 4.5 to hit resistance. But also there's going to be resistance in here from this bit of a channel that it was in. Like if I make this line a little longer, we were in here doing this thing, but we were still coming down. So we were getting tighter. And then we got to right in here. This P or get off the pot. We're running out of space. You see this downward trend is going. Let me make this bigger. Downward trend is going down. And this bottom here, bottom here, bottom here, bottom here. Like, look here, we don't have many more candles that can fit in here. And then one more, and then I'm like, you know what? It's time for me to get off the pot. And then it went down. Like, then I started buying. And then as it started to come back up, we really didn't have the volume to support it. Look, volume was shrinking. Folks are still trying to figure out the story. And I was like, we really needed the volume. Remember, 5% plus volume. If we were going to, if we were breaking out, which we weren't breaking out yet, but I do need volume if you're going to push through something, and we didn't have any volume. So we just kind of petered out there.
What kind of stock is this? What kind of industry?
This particular one, it says cannabis, but there's a reverse merger going on. There's a Chinese company that is taking over this symbol. The symbol's name's going to change. It's, did you ever hear of Temu, T-E-M-U?
Yes, a lot of people shop on that.
It's supposedly like that.
Okay.
However, I can't verify it all. I'm seeing some things. I'm looking at the SEC filings. If what they claim is true, it's going to be worth a lot of money. It's going to be worth a lot of money. I don't understand if it's like a Temu. Why don't they just go the regular route, get with the Security Exchange Commission, get with the exchanges, file for an offering, take the company public like a Baidu or whatever. Excuse me, and get an underwriter, and some underwriter runs the book, brings your company to the institutional investors, and they get so many shares, and eventually the stuff gets initial public offering, and they have this hoopla stuff, and they ring the bell, and the stock
Yeah.
starts trading. Not everybody does it that way. Some folks will look at a company that's not doing anything. We want to do a reverse merger. We're going to take over your shell. We're going to rename this shell of a company, if you will. We see how the shares outstanding and everything, how it's all structured. And this may be an easier path for us to be able to start trading on exchange. And then they'll want to uplist to the bigger exchanges. So if this stock is actually, if this is truly going to happen, I'm still trying to verify. And they start putting out news, they got a lot of revenue. Lot of revenue. And this, it could be worth a home run. 100 times your money, 1,000 times your money, who knows? But if they want to list on a bigger exchange quicker, what they would do then is do a reverse split. If I say had 5 million shares and they did a 1 for a 10, for that 10 for 1. So every 10 shares you have, you get 1. And then they raise the price. If I can think, I'm tired. They'll eventually raise the price when they do one of these splits. And then they can list on a bigger exchange, and then the mutual fund companies and some of these investment managers that have certain restrictions on buying stocks that are below a penny, they'll be able to buy them. So again, if I had 3 million and they cut it, whatever, they cut it in half, they cut it down by to a tenth of what I have, then I would only have 3,000 shares, I guess. Now let's see here, 3 million. I'm tired. You can see I'm tired. I can't even do the math.
No, it's fine. Yeah.
Times 0.90% is 270. Yeah, 30,000 shares is what I would end up with. But if say it started trading at whatever, I don't know, 10 times where it's at, and it met the criteria, 0.00, let's call it 0.004 times 10. Now it's at 4 cents, and maybe whatever, more mutual fund companies can come in and buy a 4-cent stock, which is usually not likely either. Then they could run it up from there. So it's probably more likely that it's, not a 10 for 1, but more like 100 for 1 to bring the stock up to like whatever, $4. And then the stock goes from $4 to $100. So now instead of you having 30,000 shares, say you have 3,000 shares, but now the stock's worth $100 a share, and your value is $300,000 from your investment. So it'll still work out. You just need to hold it. You just don't have 3 million shares, and it's a different play. It's just different because that's probably what they would do. I can't imagine them letting all the retail investors suck up the shares, hold on to them. Then you really have something cooking like a Temu, and then all of these retail investors get to hold on to these shares and become super millionaires overnight, like many times over. They're not going to let that happen. People with money are not going to let that happen. Institutions are not going to let that happen. They're already, okay, when you guys do this, then you guys going to do a reverse split? Yeah. And then we'll be able to offer you guys shares. So in the meantime, what they'll try to do, it's called shaking the tree. If this is all going to happen, if you're shaking a tree, you're trying to get the leaves to fall off the tree. That's exactly what they'll do with a stock like this. They'll shake it, they'll drive it up, down, shake until retail investors can't stand it anymore, and they eventually sell, and they keep scooping up shares. They'll sell and they'll scoop up shares, and then when they get all of their shares they need to buy, then they'll issue the news, then they'll do the split, and then they'll be able to dole out shares to their friends and the big boys who want to buy more of their stuff, and then the stock goes up. It's really a vicious game.
I hear.
But if you understand it, it's all good. So, all right. So let's look to get together. Let me stop this recording. Hopefully you got some